Tariffs are in the news today, and of course we'll break it down for you, get you some predictions as how this market may play out for you. My name is Paul Barrett. Welcome back into Tech Path. It is going to be a good one. I do want to thank our sponsor, and that is iTrust Capital. This is where you guys can go out and get your own crypto IRA, and you can do it either you're setting up your first IRA, or if you've got one already in place, you can roll that one right into iTrust Capital. Use our link down below. It's going to give you up to a $100 funding reward just to get started if you guys decide to go that direction. Always check with your tax advisors to make sure, but this is a good one for you to check out. Let's go over to the first tweet here that will break down a little bit about what has happened, and that is Trump's tweet over the weekend, protecting American steel. The idea is that he was imposing a 25% increase to the tariff. So we're going to go bring it from a 25%, which was where it was, to a 50% now. And all of this is designed to secure the steel industry in the U.S. Now, many people are saying, well, will he actually do it is the question mark. And of course, if you look at some of the points right here, this is all getting into what they call the taco trade, and that means Trump always chickens out. The meme coin came in. I think he started to realize what was going on, probably upset him a little bit. But it was coined by the Financial Times columnist, Robert Armstrong, and he gets into the sentiment behind the phrase, despite levying a lot of these tariffs against these countries, eventually Trump has just recoiled and misses the deadlines, doesn't necessarily follow through, and claims victory in some way. So it's kind of interesting that this is now starting to play into market strategy for both traditional markets as well as Bitcoin and digital assets. Here's a clip that kind of goes a little bit further into it. Take a look.
I think the question is, does the taco trade apply here, right? Or is this itself a response to the president discovering the existence of the taco trade? And I'm not kidding, right? I mean, the president learned about this last week. Yeah. Taco is Trump always chickens out. But when the president heard that, you just knew that some sort of stiffening of the tariff regime was coming in response to that. The president doesn't like being accused that way of chickening out, and so the question is, if you do see movement on the taco, or will taco apply to this?
It's the same people that hated the tariffs, and then they get de-escalated, and then then they whine about that they're being de-escalated. But that's fine.
The question is, if you're escalating and de-escalating and not getting anything for it, there's a huge disruption to the global economy there, and a huge disruption to the stock market.
I don't know what happened to the trade deficit.
The question is whether you get anything for it or not.
What happened to the trade deficit on Friday?
All right, so a couple points that they were making there, of course, is really around Trump not necessarily following through with a lot of these pressure points that he's applying around the tariffs. And personally, I think what we're going to see in terms of my predictions is that Trump will back off this again. He'll claim victory. And I think this is kind of the style in which he's gone about different deals out there, understanding that he can only push so far before he gets pushed back from the guy on the other table. And I think that's something that plays into what we're looking at right now, which is a 100K retest on Bitcoin. So it's versus the highest monthly close ever. 5 things you can kind of take a look at. One of them, of course, is a lot of people increasing bets of about 100K hit. Let me know in the comments if you guys think we're going to go below the 100K mark on Bitcoin. I'm kind of curious, is that an entry point for you? The latest price volatility had investors across the holder spectrum kind of to rethink their Bitcoin exposure. Does this get you more into Bitcoin if you could see a 100K entry point? Remember, last month we had a 94K entry point. Some people took advantage of that. Retail is just now waking up, and Bitcoin whales are increasingly exhibiting to a classic trend versus a reversal. So this could mean people starting to take a little bit of profits. Be cognizant of that. And I think this is one that we are going to watch this week in a very big way, because this could all play into Trump's situation on these tariffs. The thing that is going to happen is this phone call is going to happen, and this could be very positive. If you look at Trump and how he's negotiating with China, especially with Xi Jinping, this may actually be, I feel, a bullish potential, meaning maybe either we get we're working things out, or we get a big announcement that we think we've come to an agreement on something. Any one of those, I think, are good. Now, if he walks away with, hey, it didn't work out, and we got terrible, we're so far apart, that would be the only narrow comparison, I think, that's out there. China also says it's going to take forceful measures if they continue this, and mainly safeguarding its legitimate rights to interest around what the U.S. is doing around steel. And of course, this gets back into the whole point of why this trade is so important. These tariffs are so important. All right, let's get to another piece. This, of course, is some breaking news. We'll call it the taco report, and that is the Kobe letter breaks out that the Trump administration is now setting a firm deadline of July 8th to finalize these trade deals. Now, what this means is that Trump is urging all these countries to submit their best deal. So you guys get your best taco deal in there by Wednesday to avoid a reinstatement of tariffs. I don't understand if world leaders are taking him serious anymore because they understand maybe his ploy of how he's negotiating these deals. Then again, he could always surprise us. So make sure and keep an eye on this one. Trump is making it clear the tariff pause ends in 36 days. So that's his last little hammer to try to get them to go forward. Now, how does this play into the overall market? Well, Scott Bessent says, wait a minute, let me kind of break down what's really going on with China. Take a look.
JP Morgan CEO Jamie Dimon spoke this week at an economic forum, and he gave this read on Beijing.
I just got back from China last week. They're not scared, folks. This notion they're going to come bow to America, I wouldn't count on that. You know, and when they have a problem, they put 100,000 engineers on it, and they've been preparing for this for years.
Have you underestimated the Chinese state's backbone here?
Again, Margaret, I hope it doesn't come to that. And Jamie's a great banker. I know him well, but I would vociferously disagree with that assessment that the laws of economics and gravity apply to the Chinese economy and the Chinese system, just like everyone else.
All right, so Bessent and Dimon on different sides. Let me know what you guys think. I feel a little bit more on the Bessent side because I think money talks. It's markets eventually dictate the course of history. And right now, the U.S. market is the one that is the most important in the world, especially when you look at the amount of imports that are playing out on this. Now, Bessent goes on to this and talks a little bit more around debt market and how this is playing in. Take a look.
JP Morgan's Dimon also predicted a debt market crisis. How do you avoid that bond market crisis he's predicting?
So again, I've known Jamie a long time, and for his entire career, he's made predictions like this. Fortunately, none of them have come true. That's why he's a banker.
So you got to look at that. And, you know, I had to fact check Scott Bessent on this to find out, did that actually happen? Because Jamie Dimon is very notorious for this. So sure enough, if you go in and you AI this, you look at all the economic predictions he's made over the last really quite a while. 22, he made a economic hurricane prediction, wrong. 22, he also said a recession and high inflation. It dropped, recession fears dropping. 22-5, we have a post-World War III order, global instability. Not necessarily wrong, but definitely most likely going to be wrong. And then a crack in the bond market. This has not yet been done, could be. And then recession, likely outcome because of tariffs. And again, this has not happened either. So, you know, Dimon has been wrong almost 5 for 5. Now, I don't know. If odds are good, maybe Dimon is right finally. But the point being is that Bessent is exactly on point with where Jamie Dimon is, and that is on the other side of the story. One thing to also consider is the continued downward pressure of U.S. recession. What this means, guys, I think, is that we are continuing a potential maybe sideways or small market correction before we see a blow off top and moving on into some very growth-centered figures. And a lot of this will depend on how the Fed plays into the coming weeks and how Trump is also going to play out the rest of these tariffs. Gold is also on track for another $75 billion in inflow this year. This will be the largest in history. Some people would look at that and say, well, that's volatility in the market. People are flying, you know, into more secure assets like gold, which, you know, kind of hold their balance. And if you look at that, I think Bitcoin also, along with some digital assets, will also play along with this as well. So get ready. Altcoin season could be very near. Gold is also getting more media attention. And this is also one of those things that is strengthening, I think, these alternative assets. And that is a big deal. Look at this by comparison at the 2020 peak. The number of stories only reached around 100,000. This, of course, has gone up significantly. So year-to-date, gold prices have also rallied 25%, outperforming most other major market classes. So very strong right now on this. Just had a chance to go to the XRP Summit or event, XRP Las Vegas, and also the Bitcoin event. And it was interesting to see the amount of people that were still, you know, talking about gold at these events. So it was very interesting that the diversification from digital asset holders are going in that direction. All right, so one other point I want to hit to is this statement right here, relationship between the U.S. dollar and the Treasury yields. All this is broken down since April 2nd. We had a 10-year note yield that rose plus 27 basis points. This is now up to 4.43. Now, what does this mean? This means that we are continuing to see something that has never happened before. And if you compare this, because of what's going on with the tax bill, if you're pro-tax bill or you're against the tax bill, the opportunity here may actually play well for digital asset either way. And there's a couple reasons why. If it's pro, it's most likely going to create an energized market. That, of course, will have an effect on digital assets. If it does not get passed and we see a lot of variation in it, there's going to create some instability. And I think that, too, is going to be good for alternative assets. All this definitely not playing into what we've seen overall. Now, what is the reason that we don't see the traditional model the way it has been? If you look at this chart right here, it says the dollar is decoupling from Treasury yields, underscores a broader, potentially more troubling development. Global investors are reassessing America's role in the financial safe haven. Now, this is something that I do believe is happening because there are many new scenarios. One, blockchain is playing a major role in the global financial system. We are looking at a stable coin pretty much on the eve of happening, and this will play a major role. Then you've got AI and the development of all that technology and what country is going to end up being the strength around that. This is something that, again, will play and put a lot of pressure on global markets, which is why we're seeing a little bit of an underscoring around what this may look like in terms of the dollar being a safe haven. So it goes back to digital assets being really the safe haven. That's what I'm looking at. Gold, of course, is playing into this as well. Another point I want to get on is this right here. The GOP passed $1 trillion in tax cuts. Trump's big deal right now is how it addresses at the Senate level. Now, this is the point that we have to get through, because right now there's a lot of policy experts that are bracing for some changes, especially to this. And I think whether or not we get this by the 4th of July, the way that we get it is, I think, more important. All right, before I give a breakdown on this, let me run a clip for you guys to give you some more insights. Take a look.
Well, let's remember, no one thought we would pass it in the House by Memorial Day. We did that, and now it's in the Senate's hands. Not a perfect bill, but it does remarkable work in the tax space.
This new Congress was coming in, this new Senate was coming in with a sort of very fiscally responsible approach. I think the bond market is suggesting they don't really like this.
Well, I would say a couple things on that. I mean, this is a tax bill, right? So we're focused on taxes. If you think about it, Joe, there's a lot of money sitting on the sidelines waiting to be spent in private equity, in banks, and on personal level. They're waiting to see predictability and certainty in the economy. That's what this bill does. It gives predictability and certainty. Right. And that's frankly what people want.
The folks who are benefiting from that are not the folks who are investing their own money. This is not to benefit the investors, meaning and you would say you don't need to incentivize teachers, you don't need to incentivize doctors or anybody else, but that issue, real estate, oil, gas, private equity, venture capital, those people need a special incentive to actually take those jobs, and that they wouldn't take those jobs and those smart people wouldn't do that work otherwise. Is that your position?
Well, I wouldn't put it exactly like that, but what I think we've seen is this provision being in place has allowed private equity to go in and help take over businesses that are distressed and otherwise. And I think the argument can be made by having this provision in there has allowed for more economic growth.
That's what people always say. And you're never going to get the answer you want. They're going to say that it's worked really well and don't touch it. They're not going to say it's fair. They're not going to say that it needs to be incentivized. They're not going to say any of those things. You're never going to get that answer, no matter what you say to these poor people that come on.
All right, so many factors into this bill that play into this, and this is something that I think a lot of people don't understand, is the tax situation around this bill, the cut, is really not a cut. It's actually just extending what was already been done. This is the same tax program that we had before. It's an extension of that. And that was in place during the last administration. So the point being is that if this goes through, this is going to be bullish for the market in general. Now, if they make some modifications, sure, there could be some wild cards in there that may cause some impact. But I think the key here is, does this get passed in the Senate, at least in most of its entirety? That'll be the factor that you got to play into the market. And that's the thing that I think will help digital assets. Now, this last point I want to get on is just how much the market has been growing. If you look at Bitcoin doing its normal 50% up, then you would look right now where Bitcoin would pass Warren Buffett. And that would happen this year. And then Zuck would potentially be in its crosshairs sometime next year. And then eventually you're moving in on Elon territory, which is pretty hard to get into in terms of market cap of the entire market. So this is a big deal, guys. We are talking about a transfer, I believe, of wealth worldwide. We are seeing digital assets being the center of this, and it still is very, very early because you're talking about a market cap here that is still considerably smaller than its nearest, being in the gold realm. So be on the lookout for a lot of these changes because I think we are about ready to see something big happen in these markets. Make sure and get in on the Diamond Circle. It's a great place to get additional content from us. And if you want to reach me, it's out there on X at Paul Barron. We'll catch you next time right here on TechPath.